Good morning, everyone. This is David. Welcome to Session 2, Managing an Accounting Business, of our How to Build a High-Performance Accounting Business video series. I hope that you've attended Session 1 because we continue from the previous one and build on it. By way of introduction, this session introduces the accounting business management process of our accounting business system. The process gives you a competitive edge over your competition. Gaining a competitive edge enables you to increase your financial condition, profit, cash flow, and equity. Business management. Business management is how you manage your primary business processes, as we will discuss. Accounting business management. Accounting business owners work in their business and not on their business. Consortia's accounting business management process enables you to work on your business and not in your business, as we will display today. Now, let's begin to lay a precedence here as far as how you make more money. Now, let me bring you back 20, 30 years ago when Microsoft and Apple were competitors primarily with their operating systems and the applications that went with them. So the point being made is that back then, Apple with their Mac OS operating system, they obviously were wanting applications, and the same thing, of course, with Microsoft. So Microsoft decided what we're going to do is we're going to allow application developers to develop applications for our operating system, which means we'll have a larger number of cells, okay? Now, what Apple decided to do is they decided, no, if we're going to have applications, which of course they are, we're going to develop them. And so in other words, the quote I want you to know is that Microsoft decided to do this. We would rather have a smaller commission on a larger number of cells than a larger commission on a smaller number of cells. Whereas Apple was just the opposite. And at that time, Microsoft was much larger than Apple. And for your information, Microsoft decided that anybody can make a PC to run our operating system on, whereas Apple said, nope, ours is going to run on our Macs or other computer devices. Okay, so let's talk about a freelancer or sole proprietor. Now, I don't want to spend much time here. I just want to make a major point. And that point is how you make more money. So let's talk about a freelancer or a sole proprietor. So let's just use a proprietor. So obviously a proprietor works with clients. Now, that doesn't mean that they don't have employees because of the size I'm going to demonstrate here. The point is that they're going to need some administrative employees, but most proprietors, at least when they begin, do not have professional employees. And that's the point I want to make. So the idea then is that you have what we call the proprietor accounting revenue. And so let's say, for example, now this is where the number comes from. Okay. So let's say the proprietor says, I'm going to work 8 to 5, 8 hours a day. And I'm going to do that, of course, each month. So 4 weeks. And so that being the case, let's say they have 20 monthly accounting clients that take about 8 hours. And so therefore, they can pretty much handle 20 clients. So let's say each client pays $1,000 a month. So together we have $20,000 monthly revenue. And then times 12, we have annual revenue of $240,000. Not bad. Now, with local accounting firms, that is CPA firms generally, what they say to themselves is they say, look, with each dollar we generate in revenue, we want a third of it to go to overhead, a third of it to go to salaries and benefits, and a third of it as profit. And that's the model they work on. Now, I understand there's certain different local firms that change that, and that's fine. But this is just overall kind of a standard. Now, as far as Consortia small business accounting profit margin, we have 16% overhead, 36% salaries and benefits, and 48% owner profit. Now, you wonder how we're able to get those numbers. Well, that's what we're going to talk about in our other weekly series. Okay, so the proprietor accounting net revenue then. So based on those percentages, the overhead will be $38,400. The salaries and benefits will be $86,400. And the owner profit will be $115,200. Not bad. The disadvantages to this is that, number one, the proprietor can only serve a limited number of clients if they're the only professional cranking out the work. Number two, the proprietor performs all the work, obviously. Number three, the proprietor has no time to work on their business. In other words, they're working in their business. Number four, the proprietor has less time to get away, vacation, sick days, etc. It's interesting because a lot of people who want to have their own business and they start out, and again, in my example, doing accounting, for example, as a proprietor, one of the main reasons is to be their own boss and to use their own time to do what they want. But oftentimes they're stuck where they have to work their buns off, okay? And it's very difficult for them to get away. Now, number five is overall, because there's that limit, the proprietor makes less money. Now, let's look at the other picture, again, the Microsoft approach. Employees make you more money. So here we're going to use the proprietor again, but this time they have professional employees. The other one, again, they may have administrative to assist and help, receptions, whatever the case may be. But here we also have some professional employees. And then the idea is, and we're going to demonstrate this later, but the idea is the proprietor is no longer doing the work. The proprietor is managing the work. Now, most people who have their own business, especially an accounting business, would prefer to manage the work as opposed to doing the work. Okay, and again, we'll talk about that. But here, the advantage is with the employees and clients. So now we have, let's say in my example, we have 4 employees. Therefore, let's say they're each professionals and each one of them are able to work, again, 8 to 5, 8 hour each for each client. So basically 20 clients each. And again, $1,000 each, $20,000 a month, $240,000 per employee. Now, obviously, you have less, you'd have less revenue. If you have more, you would have more revenue. But again, I'm just trying to make a point here. So again, annual revenue of $960,000. Okay, so Consortia Small Business Accounting profit margins. These are our margins. And so we have 16% overhead. We have 36% salaries and benefits. And again, this is on our system is what I'm saying. And and then of course we have 48% owner profit. Now, having said that then, of the $960,000, $153,600 is for overhead, $345,600, and most of that would be for your 4 professionals, and again, some administrative help as well, for salaries and benefits. And then you'd have $460,800 owner profit. Now, again, that's limitless. You can have as many employees as you want. Obviously, the key is to building your clientele, which again, of course, we'll talk about. So the advantage is then, number one, the proprietor can serve an unlimited number of clients. 4 is nothing. You can go way beyond that. Now, I will say, if you're doing the management, you're limited to how many professionals you can manage. But that's a different story, which we will talk about. Number 2, proprietor manages all the work instead of doing the work. Number 3, the proprietor has more time to work on their business as a manager. And number 4, the proprietor has more time to get away, vacation, sick days. They may wake up and just say, you know what, I'm not going in today. So the professionals are still cranking out the work. Yes, in my example, the management doesn't get done, but obviously he can come back or she can come back and do it the next day. Okay, and the work continues. Now, again, we're going to talk more about this to expand that, but this is just my Microsoft example in the accounting realm. And number 5, the proprietor makes more money. So the way you make more money is by having employees. The way you have more employees is by having more clients. And that's why we talk about generating clients each and every day. Okay, so again, let me introduce you to what we call the CPA business management. So in a normal local CPA firm, this is what they're all striving for. Now, what will happen is, for example, if they need more professionals, What they'll do is go to a university and they'll hire somebody who came out with an accounting degree, typically, maybe a graduate degree, somebody who may have already taken the exam, or they may take the CPA exam with them. But the idea is that once they pass the CPA exam, they'll obviously be able to retain their job and move up the ladder, which is what I'm presenting to you. So let's say this person was just hired. They start fresh out of school and they come on as a junior professional. Everybody always starts on the bottom of the ladder. So they start out as a junior professional. Now, notice to the right, there are three categories. Professionals perform the work. Managers manage the work. And partners get the work. And this is the traditional way in a CPA firm, law firm, most professional organizations, okay? Now, I will say to you, this is old school, okay? These days, because of competition and many other things, it's more difficult to generate the amount of clients you need using this model. But nonetheless, this is what most of them still do. So you become a junior professional. After a year or two, you will become a senior professional. And they will hire another junior professional to take your place. And as a senior professional, because you've now been working for a year or two, you will, in a sense, supervise the junior professional. But now you're being supervised by a junior manager. Now, after being a senior professional for 3 or 4 years, you would typically become, in a CPA firm, a junior manager. And then as a junior manager, obviously, you manage the work being performed by the senior, and the senior manages the work done by the junior. Now, once you've been a junior for 2, 3, 4 years, you move up to a senior manager. And so again, you'll do less mundane management roles, or tasks, I should say. You're kind of overseeing the junior managers. Now, at this point in time, the question is, will you become a partner? Now, as I say to you, in a CPA firm, law firm and others, you become a partner by getting clients. And so if you can show at the very beginning that as a junior professional, I brought on a couple of clients, or as a senior or as a junior, that's going to be another reason why you're made a manager. It's not because you have just because you have experience, and it's not because you show potential to manage, but it's also, but you've shown potential to pick up clients. And then you obviously move up again to senior manager. Typically, that takes about 7 years. Now, at this point in time, the question is, again, can you become a partner? Now, you only will become a partner if you're a rainmaker. If you're not a rainmaker, then you're going to most likely leave as a senior manager and go to work for one of the clients of the firms, as a controller, for example. Or you may decide, I want to run my own firm, so I'm going to go out and start my own firm. So you have the clientele, but not enough clientele to make you a partner, okay? You weren't a rainmaker. You could pick up clients, but you weren't a rainmaker. So the rainmaker becomes a junior partner, and then, of course, they continue to move up as they continue to pick up clients as a senior partner. So again, the partners get the work, managers manage the work, and professionals perform the work, okay? So now, keeping that in mind, that doesn't stop with us, although it makes major changes. And that's what I wanted to point out to you. But before I do, I want to show you, let's say that person wanted to be a partner. They weren't made a partner, so they jumped out, and they did have clients, but not enough clients to be made a partner for whatever reason. So they start out as a proprietor. And once again, they're back to kind of starting over where they're doing all the work. And this is when you work your buns off, okay? You're working some hours here because you're doing everything, all the work. You may not even have administrative help, okay? When I started, for example, I had a good sufficient amount of clients, not what I was quite making in my salary check, okay? But close enough where I could live, basically. So the point is, my first administrator was my wife. She assisted me. She was the receptionist, she is, so on and so forth. But the point is that you are pretty much doing everything on your own. Now, hopefully you begin to grow. And as you grow and pick up more clients, then you'll hire your first professional. And they'll begin to take some of that work off your load, okay? And so now you're able to spend more time perhaps working with clients, but yet you're still pretty darn busy, okay? Now what happens is, as you continue to grow, that professional becomes a senior professional. And then you hire another junior professional. And then, of course, as you free up more and more of your time, you're getting away from doing the work to managing the work. You begin to pick up more clients. And so now what happens is that senior professional becomes a manager. The junior professional becomes a senior professional. And then you hire a new junior professional. And then now you're getting to the point where you're mostly managing and getting clients, not working so much on the work. You continue to pick up more clients, and you hire another person. So that manager becomes a senior manager. The senior professional becomes a junior manager. The junior professional becomes a senior professional, and you hire a new junior professional. So this is pretty much how you develop a CPA firm, okay? And this is the way it works. Now, in the end, if I were to look at a CPA that is a local CPA firm business organization, this is what I would see. Now, based on what I just showed you, I'd show, you'd show the accounting partner and you'd have the professional staff, which includes the senior and junior managers, senior and junior professionals. Now, let's say, for example, you wanted to grow, maybe wanted to share some overhead. So you pick up a partner. You weren't a big tax person, so you pick up a tax partner because all of your clients, or many of your clients, need their taxes done. Okay. So you decide to merge together. Then as time goes on, you end up getting a managing partner. Managing partner just manages the other partners and the overall work, but they don't do the crucial primary business processes that we're going to talk about. So you first grow what we call a vertical build. You build from by yourself to where you keep building underneath you, blocks. And this is what we call a horizontal build. You begin to spread out to become bigger by having more partners, for example. Okay, now this is the Consortia Accounting Business Organization. Okay, so what happens is that what's missing with accounting firms is that they have the management, but they only manage the production and the finance. That's it. They're not doing any research and development, that is improving their products and services, adding products and services. They're not doing an official marketing and sales, okay? They're still doing the old good boy network, developing relationships. But they're spending, again, most of their time in production finance, and they're not doing customer service, which, as we talked about, are those things that are critical in our previous session. Okay, so let's build this then and show you how we work with either Consortia Small Business Accountants, which is what we were designed for originally, or now how we work with independent accounting firms that we advise. So the point being made here is this. We, Consortia Accounting Business Advisors, we manage the research and development. It's taking place. We manage the marketing and sales. It's taking place. We manage the customer service. It's taking place. While our Consortia Small Business Accountants Network partners, or I should say members, are the ones that are doing, as we showed you with the accounting firms, they're overseeing and managing the production and, of course, the finance, getting paid for the production. So it's a team approach here as far as management. So the same thing, again, with our independent accounting business clients with Consortia Accounting Business Advisors. So the idea is, again, we're doing the R&D, we're doing the market sales, we're doing the customer service. And I should say with Consortia Small Business Accountants, as well as independent accounting businesses, we also have developed, for example, let's say as far as production, they're doing bookkeeping, payroll, accounting, and taxes. Well, we have literally gone through and developed process for each one of those. We have a bookkeeping process, we have a payroll process, we have an accounting process, we have an accounting analysis process, and we have tax return processes for each major tax return. So the idea is these processes allow you to have the quality that you're looking for, the output, but you're able to have the efficiency by getting the work done productively. Okay. And then again, we also have a system for how we do finance. Now, as you know, that's what the rest of these sessions are going to talk about. Next week, we're going to talk about R&D. The next week, we'll talk about marketing and sales. The next week, we'll talk about production and finance. And then we'll talk about customer service. And then we'll be finished with the video series. But we want to make sure that you understand how. And so we've talked about in our first session of how critical it is to get the primary processes functioning. And this is how we do it. Okay, so let's go back and review. So any business, whether if it's an accounting business or not, any business has to focus on four things. They need to make sure they're increasing financial condition. They need to make sure they're increasing profit. They need to make sure they're increasing cash flow. And they need to make sure they're always increasing their equity. And if you find an organization that has a good financial condition, a good profit, good cash flow, good equity, they're going to be a high performance accounting business, in my example. Okay, that's what it's all about. And as you know, the financial condition ties into the balance sheet, the profit ties into the statement of cash, the income statement, the cash flows ties into the statement of cash flows, and of course, the equity ties into the statement of changes in owner's equity. Okay, that's how we measure these four things. So as a review, the concept is we have this accounting business processes, we have R&D, we start our business with certain products and services, we market them, we sell them, we produce them, we finance them by getting paid, and we provide customer service, making sure everybody's happy, which we'll remind you again here in a moment. And of course, these things have to be managed. So we manage R&D, marketing and sales, customer service. We give you templates of how to be efficient and effective with your production and finance that you would follow. Now, if you're independent, you choose not to follow that, that's fine. That's your business. But we're going to strongly try to change your mind. We're at least going to present it to you. Now, the point is here, accounting business results. So again, with each one of these primary processes, as far as management, we're looking to gain a competitive edge. As far as R&D, we're looking to increase our profitability. As far as marketing and sales, we're looking to consistently generate clients. For productivity, or that is production, we're looking to always increase our productivity. Great outcome, as efficient as possible. And as far as finance, we're always looking for ways to increase our cash flow. And finally, with customer support, or what we call client care, I meant to say customer service, we call client care. The idea is to retain your clients, increase your client revenue, and increase your client referrals. Okay, so again, that's session 2. That's how we get the management done. We're both work together on our own responsibilities. And again, the idea is in the end, achieving those primary objectives. Okay, so we gave you our introduction last week. We gave you our management, how you gain a competitive edge today. And of course, now we'll get into the details starting next week. We talk about research and development, how we have highly profitable accounting and tax services, as well as products, market and sales, how we consistently generate clients. And by the way, when we say that to you, when we begin to work with you, we're upfront with you and we say, it ain't going to happen tomorrow. But our system, the idea is that for the first few months, you may pick up 1 or 2 clients a month. Then as months go on, you're going to start picking up 2 or 3 clients a week. And then as time goes on, you're going to start picking up 2 or 3 clients a day. But overall, that takes about a good year to get to that point. But we do get there. Okay, now again, I'll reserve that for session 4. As far as production, we talk about performing accounting and tax services accurately and productively. Number 6, finance, how we're always increasing cash flow. And we'll introduce you to our system that has no AR, has always get prepaid, and it's just an excellent system. And we'll talk, of course, about the benefits when we get there. And then finally, with session 7, we'll talk about customer service. Again, how we retain clients, increase client revenue, and increase client referrals. Thank you for attending. Have yourselves a wonderful day.